Ace, we got Dave Moenning on from State of the Markets, a product on MarketFi. Dave, how you doing today?
I'm doing great. How are you guys?
Good, good. Sorry about a little Kroger discussion.
Oh well, you gotta work on that. That looks like an interesting trade right now.
Okay, so you do a piece, a monthly piece, the cycles for the month, and you just came out with the cycles for December. So what are the cycles for December telling us?
Yeah, the cycles for December. I mean, everybody on the planet. What's that saying? Something that everybody knows isn't worth knowing. But at this stage, lots and lots of people follow market cycles, sentiment, etc. But right now, the cycle. What we do is we look at a combination, or we create a cycle composite, and it's a combination of the 1 year seasonal cycle, the 4 year presidential cycle, and then the 10-year decennial cycle, which gives us, a composite to look at, and that goes back to 1927. Then you plot it out on a chart and see how things are going. What's cool here is it's kind of amazing when the market gets in sync with with these cycle composite. It tends to stay eerily with it for quite some time, and obviously it will get out of whack on occasion and go its own way, like it did in October and November. But for the vast majority of the time, it tends to be pretty spot on. So it's something. While I do not, absolutely not, believe in predicting markets, I don't have a crystal ball. I'm a systems and rules guy. Believe that the most important thing is to stay on the right side of the major trends in the market, and we just don't make predictions. However, these cycle composites are so good that they are inputs in both my daily market environment model as well as my weekly market environment model. So long story for that. Sorry about the intro. But basically, what December looks like, people probably have it a little wrong. Right now, you're looking at what should be, according to the cycle, a little rally into the first week and a half into December, then a fairly substantial pullback. And then finally, your traditional year-end rally takes hold after around Christmas time, and you finish at the high of the month for the overall cycle composite. However, the 1 year, the 4 year, and the 10 year are not agreeing right now, and so basically, we have to understand that the market, just because it's December, doesn't mean you're going to go straight up. You're probably going to get a pullback, probably going to get some sort of correction like we're having right now, and the timing of it, whether it's a week off or so, isn't really that critical. But it's that time of year. You've got positive seasonality on your side. But I would warn people. I'm a macro guy, big picture. I would warn people that coming into 2014, that all the cycles project, especially the 4 year presidential cycle, projects a pretty substantial pullback in the March-April period. So you may be looking at a sell in May and go away opportunity again next spring.
Do you think too many people are leaning, because everybody I talk to and everybody I see on CNBC that pops in right now is saying exactly, they're saying the seasonality, they're saying, well, there's nothing going to derail this market. I mean, we were saying it even on the show here this morning. Do you think the short-term guy is now maybe everybody's just saying, well, nothing's pulling this market back. I'm buying every time we pull back 1%. Do you think they're leaning too bullish here coming into the end of the year, and maybe, this will be surprised here and actually get a sell-off at the end of the year?
Yeah. I do. I think, again, I'm not predicting what's going to happen, but it would not surprise me at all because, first of all, the cycles have gone opposite since the middle of October. Market's gone up, and the cycle said we should have gone down. Also, again, something everybody knows ain't worth knowing. And
that's true.
Everybody is looking for this advance. Just look at any of the sentiment numbers. The investors' intelligence numbers came out this week. Biggest spread between bulls and bears of the year. My long-term sentiment signal is screaming to pay attention here. So what that tells you is it isn't about people being right and wrong. It tells you about what people have done with their money. And by the time everyone comes on the show and says, "Oh, I'm bullish, I'm bullish, I'm bullish," what does that mean? Well, it means they've already bought.
Yeah.
So I think you're right. I think there is a way too much optimism right here. So a little shakeout to fake people out, especially when everybody's looking for the same thing, you got to raise your eyebrow a bit there.
Okay.
Joel, maybe you should go get those puts on that spies again.
I'll pick my point. So we talk with guests when they come on, and everyone kind of has their own ways for their trading preparation. I like to look at charts at night, do my levels, and be prepared, have a game plan. I've tried to be
Excellent.
a systematic trader, but haven't been able to find that holy grail yet. What kind of preparations do you do for your trading day?
First of all, keep looking for the Holy Grail, and if you find it, let me know. I've been
Me
looking
too.
for it for like 28 years. So everybody I know has been looking for it. So I basically gave up. But I too, I think most people who are traders, especially if they're new traders, they need to understand that they think of trading as this sexy business and it's so cool. We're going to make all this money and we're going to high five and all this good stuff. I think you guys agree it's really a lot of grunt work. I mean,
It is.
you grind out the returns in this business, and that's really what it's about. So, my preparation is I come in every day at 5 o'clock at my desk. I review the overnight news. I review the overnight markets and the data. I get about 40 emails a night overnight, so I got to review all that. You then look at the futures action, and what I want to do is I want to make sure nothing happened in Europe and China, and then any other major news. Like this morning, we got the Challenger numbers, which were nothing happened there. Had jobless claims, which first time under 300,000 ages. That's big deal. And then that GDP print was surprisingly strong. So, we may be back in taper tantrum mode today. But most importantly, then, I look at my model readings. Everything I do is driven by the model. What is the market environment? What are the odds? What does that tell me? Is it bullish? Is it bearish? Is it neutral? And right now, my market environment model has been neutral for quite some time. And what that tells you is the current environment doesn't favor either team. So what I like to do in that situation is to let price be my guide. So like you just said, I want to review my price levels. When we're in this price-oriented mode. And right now, I mean, it's pretty obvious. Anybody with a computer can see it. But 1780 and then 1780 and then 1813 are the current really important levels. And then if you break 1780, pretty sure you're going to 1745-ish in a big hurry.
Did you
So-
read? Did you read my blog earlier? No,
Yes, I was
come on, Dave.
Joel, he's looking at
Sorry.
your blog.
He let-
He's reading. He's a fan.
Oh
He's a
my God!
fan.
Now I
That's
know
it.
I'm
Busted.
right. Oh my gosh!
Oh, I know I'm right. Dave Moenning's on board with me
Dave
here,
just
too. Get
confirmed.
those spy puts, Joel.
Those numbers, those
Get out
exact
there, get
numbers I
those
had
things.
in there, Dennis. I had those exact numbers in there based on the futures. Just a quick follow up. You said 5 o'clock. Now, what do you want? Mountain time or?
Yes. So that's it's pretty lame Eastern time, 7 o'clock. But
Okay. No, I just want to.
it's still dark. It's still dark when I get here. I think the most important thing that I try and do every day is to understand the market drivers and to understand, I've got a 1-minute chart up all day as probably everybody else does, but I want to know why. The market yesterday was insane. You look at a 2-point change and you say, oh, nothing happened. Well, we had a 9-point drop. We had a 14-point up. We had 21
Wild.
points down. So what's driving that action? And if you can understand what's driving that action on a daily basis, then you're not likely to get fooled. And that makes your trade setups for individual stocks or your Momo stuff a lot easier. So, right now, obviously, well, not obviously, but to me it's obvious that the taper tantrum issue is really all the rage right now. But it's really not clear whether good news is bad at this point. Because, look, based on yesterday, that was pretty much the case. But now this morning, we've got this great GDP print, surprisingly strong. And the futures aren't moving down all that much, but I guess you've got the Atlanta Fed Lockhart come out and said his usual stuff that they'll be looking at tapering in the next couple meetings. Which I think the big fear here is the Fed would taper in December. I think that's silly, but January might be on the table. You never know.
Yeah,
So-
see, I don't need a 1-minute chart. I have Jake and Brent on the wire.
There you
So,
go.
so every time like the market moves like 3 points, I'm like, Brent, what's the news? What's the news? And he's like looking at
Gotta
me
get
like,
that Benzinga Pro going, guys.
yeah, that
That's it,
Benzinga
the
Pro, and
Benzinga
I'm,
Pro,
they're looking
yeah.
at me like, oh my
Can't
God,
figure it out.
the market barely moved, and I'm like, news. What's the news? It's got to be
I'm
news.
always asking too, man. Like, what's the news on this? Like last night, we were looking with the Morgan Stanley Citigroup downgrades at Deutsche Bank there, and those took the market by surprise there because that did not break on the major news wires at all. Like Benzinga team, where's that? So
They're great, man. They
They
scan.
hunt. They find it though. They find it, and obviously,
But isn't
Citi
that
and
really
Morgan
the
Stanley.
key? I mean, if you can understand what moved the market, then you can make a pretty good decision
Yeah,
as to whether it's
exactly.
important or not. And knowing why the market moves, 18 points in 16 minutes, hello, you got to pay attention to that.
Yeah, it's very important because obviously, if it's just a technical thing, it's one thing. But when there's new fundamental news, and we're going to talk about, we've actually got this seminar coming up at noon on information arbitrage, and just
Excellent.
talking about how important information is. I mean, that is a trader's best friend is information. It's all about obviously understanding, if the orders you're trading with and trading against are informed or uninformed. And obviously, the more information on your side, the better informed you are, and the better trading decisions you're going to make.
Right, right.
Yeah,
And then those key levels, you got to watch those, as
All that.
you guys pointed out.
Yeah, key example. Hate to go back and remind myself about the Tesla trade, but when I had when I had those, I mean, technically, I knew what I was looking at and the formation and everything. But boo, when I'm driving into the office, I'm thinking, man, I hope there's some good Tesla news. I hope there's some good Tesla, because that's the driver. You had a lot of people short it. Lo and behold, the day after I covered my calls,
That's always
they come in and it's trading green, and the news was an upgrade to the best idea ever. You have to own it at the market, I think, by Morgan Stanley, and the other thing was a German company. I believe backed off on their investigation on the cards and stuff. So you're right. It's the news, it's the information. Glad to see you're at your desk early, seeing if the fundamental news. We could talk about charts all we want, but really, when that fundamental news comes out, you really got to pay attention.
Yeah, you got the algos. Algos are going to react faster than we can react. The really funny thing is the algos oftentimes are confused and they don't get the news right. That's the really humorous part, is when they move on a headline and like, wait, you didn't read the rest of the headline, and so yeah.
Did you send Dave our presentation already here? Because he's giving it all away here.
I know, man.
I'm sorry, guys.
Oh, that's funny. That's funny.
This ends our interview with Dave Moenning. No,
he's read our presentation. He's taking all our guns away. Actually, we're going to talk about how the news algos overshoot a lot of times and they get it wrong, because a lot of times these programs, and everybody's running these. I mean, some people aren't probably as well informed as other people that are running some of these programs, and they're just reading a headline there, and a lot of times not going into the details. And if they read it as good, and it's actually, when you get into the devil's in the details, and if it's not that good, sometimes you'll see the stock actually shoot the wrong way off the bat, or you'll see it overshoot, where you think something's really going to be a good report here, and it's actually not as good as you think, and they buy it too high. And there's always an opportunity for the opportunistic trader out there.
So the next example of that's probably going to be the jobs report on tomorrow. We get the algos will be looking for numbers in the print, and then we're going to have to read into that report and see whether it actually makes sense. So it's always funny to see the algos move the market, and then the humans get in there and actually read it and say, hey, oh, we better go the other way.
And that's the difference. A human being can think. The algorithm
Yes.
can do what it's programmed to do. So, and that's the biggest difference there, is like we can rationalize, we can adjust quickly. That program, and they say, oh, we have thinking algorithms and all this now, but it's never going to work like a human brain. It's very good at responding to pure information and trading off of pure information. But when there's some interpretation issues in there, I think a human being is always going to be superior.
Yeah, and that takes me back to the concept of strategy. Again, we talked about this business being a grinded out business, and right now I think it's important for everybody to understand you've got a neutral. Even though the indices are up, the overall environment is neutral. There's some divergences going on. The momentum hasn't been that great, so I think we've got to play the game. Even though it's December and everybody knows that the January effect is coming, blah blah blah, I think it's time to play the game a little more conservatively. And if we've had a great year this year, knock on wood, and I think it's time to maybe book some of those profits and play more conservatively.
Okay, and some of the issues that you're looking at. I mean, we've had a nice run in Apple here. Is Apple part of your portfolio, or are you trading it? I mean, had just a tremendous run since breaking out of 530. What's your approach here? This gap up day here in Apple.
We have owned Apple in our portfolios. Obviously we got out of it, last year. It's been it looks like it's returning to a trend-oriented situation. So yeah, I think obviously you don't want to be. I'm not a short-term trader like you guys probably are.
Yeah.
So different time frames, and that's a really important concept, is to understand your time frame. So I look at. I'll look at the Apple chart and say, okay, I missed it. If I'm not in it, you had that beautiful setup in the middle of November down at 520. Then you had a classic break So you're just on a momentum run right now. So the weekly chart says, hey, you missed it. Look for the next resistance and buy the pullback.
And what kind of pullback would you be looking for in Apple? I mean, we've had, basically 40 points straight up here. You're looking at for a retracement, or are you a moving average kind of guy? What are you looking for?
Well, it's pretty simple technical analysis stuff. I mean, in today's world with all the computers and all the indicators, remember I've been doing this a very long time. We had to draw trend lines with a ruler back in the day.
Nice.
Your moving average involved a calculator and an eraser. So yeah, to answer your question, I don't think the moving averages are very helpful right now with Apple, especially if you're looking at 570 something this morning. So I would be looking to pull back, maybe back down to 5. If you have to be in the stock, if you can get anything below 560, go ahead and take a little position. I might leg in at 550, and I definitely want to then go back and look at the 540 area. And basically, if you break, my opinion would be if you break below 550, your move may be in jeopardy, and the short sellers may be coming at you. So, I think it's clearly a Momo move right now. So we got to be careful.
Yeah, it's funny that you mentioned using a ruler to draw on the lines. I can remember when I started doing technical analysis when I was down at
Did
the
they have rulers back then?
Yeah, they did. They did at the Chicago Mercantile Exchange. Used to buy a chart book.
Sure.
And it would come out every Monday, and then every
Yep.
day after the close, you'd have to put the high and the low and the close in, and then and do your numbers off. That's funny that you mentioned it.
Yeah, remember those? That was exactly the way it worked. I used to get the William O'Neill book, which was like 2.5 feet tall, and you'd drag it home, and on a Friday night or Saturday, whatever. I just remember paging through, and it's no different today. We just do it with electronic pages. You go through chart by chart by chart, and like I said, it's grinded out every Monday. We review or my son is probably the key in this area because he does all the work, but he goes through 400 or 500 charts.
Yeah.
Looking for our setups.
Okay, so you gave your call as far as your levels, and at the end the end of the year, perhaps a surprising sell off. Are you positioning yourself accordingly, or are you just kind of like the market's going to go up forever guy, and I'm not gonna try and hedge on the downside at all?
No. We don't. We are not potted plants. We're fairly active in our approach, but I'm also a trend follower. So, the key is to get the big moves right. That's my battle cry. So when the market is making a big move, like it has done this year, we're long and strong and enjoying the ride. But right now, like I said, our market environment model is neutral. So even though we're very close to all-time highs, the environment model has been neutral. So we're in a cautionary environment right now. We're actually in our market timing programs, we're in cash or our trading programs. For our stock portfolios, the insider portfolio, we've got about 50% cash, but that has more to do with the fact that we just can't find any stocks to buy right now. But that in and of itself says an awful lot about the market. So, so for our trading programs, we're in cash, but that could, move over 1810, bam, we're right back in and back on the train. So,
okay, so you would look to buy this on strength and just let the market forward in May on the downside. So
yeah, I think given the remember we've got the year-end window dressing coming up, right? Mm-hmm. And the deal is that if the quarter is up, if the month is up, then usually the window dressing is going to go in the same direction. So I think it's even though everybody on the planet knows it, probably a safe bet that the window dressing is going to be to the upside. Remember, the average hedge fund got smoked again this year in terms of compared to the S&P, and I know that's not their game, but there may be some performance anxiety kicking in here, and if the market, and that's why I think 1780 is so important. People are going to be buying the freaking dip, right? So if 1780 holds, then the dip buyers are going to come back in a hurry, and I wouldn't be surprised if we pop higher. However, that 1780 is key. You break below 1780, get down to the 1775 area, that old support zone. If that breaks, that tells me that the hedge fund guys are trying to bring the market back to them and make their numbers not look quite as so bad.
What else I look at too, and I don't know how much you look at the breadth, but there always seems to be, like on the pullback days, even like yesterday, there always seems to be sectors that are strong. where money is simply not cycling for the most part out of stocks. It's cycling into different sectors. It might be cycling into some defensive names, but it's staying within equities. And
Correct.
I can remember, when we got real sell-offs back in the day, I'm looking across my board and we're red across the board.
Right.
And that's when I really start to feel like when I start seeing it red across the board, I was like, oh, this might actually be real. And I have not seen that in the last few months, not any days at all.
Nope.
Even on our down days, I'm seeing certain stocks and certain sectors still red. So do you look at that too, Dave?
Yeah, we really do. I mean, that's the breadth and strength of the overall market, and that tells you a lot. I think we're starting to see some divergences, but on my screen every day, I always look at the banks and the semis.
Yeah.
Because if you're going to get one of these, it's time for a consolidation pullback type things. The bears will attack one of those two, and you can just see it on a 1-minute chart. The market's up, and suddenly, bam. The semis are hit because they're extended, or the banks are hit because they're extended, or some sort of news comes out. And so if you've got what I would call an artificial pullback or a run-of-the-garden variety type pullback, you'll probably see one of those two sectors be attacked, in my words, and then take it down, market goes down with it, and then bam, they'll turn it around and run it the other way. But that tells you that your pullback is a buying opportunity, not like we saw back a couple of years ago when everything was a disaster across the board.
Yeah.
And those numbers that you're giving on the S&P 500, are you looking at the cash index?
Yes,
Or are you talking
yes.
about the futures? Okay.
Cash.
Because
So it's 3 or 4 points.
to me,
difference.
cash is trash because
It's the same index, Joel.
it's the
It's 3 or
same
4
index.
points
No,
difference.
it's not.
You can look at either intraday. It's the thing is the cash obviously doesn't trade after hours.
It's
in
right.
pre-market.
That's
So-
right. The futures.
But if you're intraday and you're looking at the cash, that's fine. You just got to do the adjustment. There's a fair value calculation. I think we're like 3 points difference or something right now.
Yeah, we're a money. I apologize. I should have clarified that. We're a money. I'm a money manager, and our clients. We run money for mom and pop and some institutions, of course. But it's pretty basic stuff. We don't use futures. We don't use options. I'd love to be able to use options, but when you've got money at a trust company, they don't allow you to. So
Correct.
So again, I apologize for the old school approach and using that cash.
Old school works. I mean, some of these, strategies. We had Jeff Goldman talking, and from that classic book, Reminiscences of a
Oh,
Stock.
absolutely.
And the theories that were taught, we even back that book's 70 or 80 years old or something like that. But the basic principles still apply. It's still the same game. So old school stuff still works in a new market. I'll say it. I'll go out on the limb and say that. So.
Thanks, Dennis. You're making me smile.
Okay, we've had Dave Moenning on of State of the Markets. He also has his latest piece on MarketVi, Benzinga.com. You should go there and check that out.
I actually just put the link in the chat.
Okay, thank you, JoJo. And Dave, thanks for coming on. Love your insight in the markets. And
Thanks for having me. It's been fun.
Yeah, we'll see what.
Thanks, Dave.
Yep, say hello to your son too, and we'll get him on very quickly. But we're gonna move on now to Mighty Joe Young with some headlines. Thanks again, Dave.
Thank you.